just want to make a quick shout out to a gentleman who has taken the time to leave us a 5-star Google review, Mr. Rob Bolt. Rob, thank you so much, sir. Congratulations on 200 awesome podcasts. I've learned a lot so far and they're only getting better. Would love to hear more about service agreements and even more system talk. Well done so far. Rob, thank you so much for taking the time to leave that review. Let me tell you, they are in the pipeline, actually. I have recorded a podcast already with the one and only Mr. Al Levy, who's the standard operating procedure guru. That's done. It's already recorded. It's backlogged, so that will be coming out soon. And of course, there's going to be a lot more stuff coming in that space when we launch our membership site in regard to systems and processes. So yes, service agreements, good call. I'm going to go do a bit of research on that as we speak. So thank you for the heads up, much appreciated. Guys, if there's anything that you would like us to cover, by all means, just like Rob's done there, let us know what it is. Send an email through to info@thesiteshed.com or post it in the reviews or whatever. I will endeavor to dig it up if we haven't already got it, especially. And we definitely don't have anything, I think, on service agreements to that depth anyway. So I will keep digging on that front. Anyway, thank you very much, Rob. Folks, enjoy the podcast. Unfortunately, tax is just one of those things that we cannot avoid. However, there are some very useful things that you can do to make sure that you don't find yourself in the red when it comes to tax. And there's also some really useful things that you can do within your business, which can help you form a really solid foundation and, I suppose, understanding of the financials of your business and things that may sound completely boring, admittedly. However, they are important. Guys, you're joining us today for the second episode in the Tax Essentials for Tradies and Contractors series that I am conducting with my co-host for this series, Tab Burkhalter out of the US. Tab is a tax specialist, and this is episode number 2, where we're talking about understanding cash flow and reporting, both extremely important parts of running a business. So I encourage you guys to get a pen and paper out and take notes. The first episode, in case you missed it, was why you need to keep 2 sets of books. Go and check that one out. It is this episode is designed to lead into the previous, so you will find that you'll get a lot out of that if you go and check out the first episode. Anyway, guys, I know you're going to love this one. Understanding cash flow and reporting, super important part of business. If you do enjoy it, please let us know. You can leave a review over at iTunes, Stitcher, SoundCloud, Spotify, YouTube, Facebook, Google, whatever. We much appreciate that, guys. It does help with our rankings, and it does make us realize that what we are doing is worth it for y'all. Anyway, that's enough from me. Enjoy the show. We're going to jump right in. I look forward to hearing your feedback, and you can join the conversation over in the Facebook group if you wish. If you're not already in there, get in there because it's friggin' awesome. All right, ciao. Today's podcast has been proudly brought to you by Tradie Web Guys. Tradie Web Guys work with tradespeople only on their websites and marketing solutions to help them stand out from their competition. Everything from web design through to SEO, search engine marketing, content creation, you name it, guys. It is a customized solution for trade-based organizations, and it's fantastic. Head across to tradiewebguys.com.au/apply, fill in the form, and let's have a conversation. It'll be the best thing you could possibly do to kickstart 2019 the right way.
Giving tradies and contractors around the globe the tools to run a modern business. You're listening to Toolbox Talks from the Site Shed. Now here's your host, Matt Jones.
Hello, welcome back everybody to the Site Shed podcast. You are joining me, Matt Jones, and Tab Burkhalter from the Numbers House over in the United States. Tab, welcome back.
Thank you for having me.
Tab, this is part 2 of the Tax Essentials for Tradies and Contractors series. The first episode that we recorded was called Why You Need to Keep 2 Sets of Books. And in that episode, we covered off on some pretty important things around understanding, what you need to pay yourself in order to get money from a bank or from a vendor. And just some interesting things there around, I suppose setting up the right chart of accounts with your tax system so that, you're paying the right tax and you're depreciating the right assets and that kind of thing. So for the listeners out there that missed any of that, make sure you go back and check that one out. In this episode, we're talking about understanding cash flow and reporting. And this is, in my opinion, one of the fundamental building blocks for any business. It's something that I have had a lot of trouble with in the past, to be honest. I'm not much of a numbers-orientated person. However, technology has made that a little bit easier for me to grasp. And I think as well, strategic planning and structure and management has also made it a little bit easier for me to get my head around, like allocating specific times to keeping on top of cash flow and reporting each week has been a significant change for me. So I'm looking forward to diving into this because I know you deal a lot with contractors and the construction industry and tradies and all that kind of stuff. And I think that is an issue that a lot of them have. I mean, we're not by nature numbers orientated very often. So sometimes I know it's easier to pull the blinkers over our eyes and just keep plugging away and not looking at the numbers because sometimes we don't like the look of them. However, it is important. So thank you for joining us back at the microphone again. And I'm looking forward to diving into this episode with you. So understanding cash flow and reporting, I mean, I suppose primarily we're talking to business owners here, but I think at a fundamental level, we're talking to anybody that makes money.
Well, we are, because as my 12-year-old daughter informed me, cash is king, Daddy, and I don't have enough cash, so I'm not a queen. And that's where we have a society where we have a taxing system that wants to measure and charge people based upon an accrual method of accounting, which says that you pay tax on what you might earn or what you're forecasting to earn. And that's great and good that you have an obligation or you might have a contract. But at the end of the day, if you don't have cash to pay your mortgage or cash to pay your vendors, you're out of business. And that's the reason why we tell people that we have to monitor our cash flow. And that's where we say that cash is king.
Yeah. Okay. And so when we're talking about, obviously people understand the concept of cash flow, but I think the big paradigm shift for a lot of guys is understanding that you need to understand what's going out and what is potentially going out, as well as obviously what's coming in. And I know that was a bit of a disconnect for me. Like yeah, okay, cool. I've got these invoices out there and they're due to be paid. That's great. But then when you look at, okay, what needs to be, what your expenses are for that month, they like very often, I think those sort of things get overlooked. And I think that is one thing that technology has been able to make a lot clearer for me. Is that your experience?
I believe having a good financial management system helps you see exactly what your outstanding liabilities are, and then you can make a better informed decision. I'll give you a prime example. We were dealing with a contractor and they needed to buy, or they wanted to buy a forklift to be able to put a high lift on to raise and do some work. Now that they were only spending $150 at a time to rent the forklift. They could buy one for $15,000. Okay, great, not a problem. When they sat down and ran the numbers, it was they could not justify the cash flow outlay to buy a $15,000 forklift because they'd have to pay for it at once because they did not have the ability to finance it. But cash-wise, it would have depleted the company and sent them into bankruptcy because they wouldn't have had the resources to have paid it. Right. So it's one of those times where it can make good sense to do, but your cash doesn't support that expenditure.
Right. Interesting. So let's talk about, I suppose, some frameworks around, I respectfully, we're going to be diving into, I suppose, laying the right foundations for the business in the final episode. However, I think it's important to, when we're talking about understanding cash flow, getting some clarity around what it is we actually need to understand and how we look at that. And then we can jump a little bit into reporting, because I know how important, doing regular reporting is, so that you don't get too far ahead or you don't get too far behind with things like, oh my God, it's, we do our quarterly reports, and by that stage, it's almost too hard to come back and make up for what we've lost.
And you're exactly correct. So with your cash flow, the most important thing is to create your budget as to, say, for example, we have a tradie who knows that when they go out to do an HVAC job, a heating and air job, they're going to spend money to put gas into the vehicle. They're going to have, say, maybe $15, $20 worth of supplies that they're going to have paid for. And what they have to start doing is looking at where everything has an actual cash outlay for that service call when they run out the door. And what a lot of people fail to do is they will set a price. They will set their revenue price and not take into account all of the cash that they're going to have to pay out to get that service price. We did work with a satellite dish installer. And at the time and this was back in the early 2000s, 2 dishes were coming out to where people of different ethnic populations could get a local satellite signal as well as one from their home country. So you were having two satellite dishes installed. Fantastic. So the owner of the company came out and said, hey, we will install your satellite dish for $140 for a single dish. But if you have 2, we're going to do it for only $149. What he failed to take into account is that second dish required an additional $40 of labor and materials.
Right.
So he was thinking that, hey, this is a great deal. We can get a lot more business in the door by doing these 2 dishes. Well, he did. He went from a model where he was doing 80% single dish with a profit of $80 per install to where he was doing almost 90% 2 dishes with a $36 loss per job.
Right.
And within a year, the company was closed down and in bankruptcy.
Jeez.
All because he did not take into account the cash that it took to service what they were trying to do.
Interesting. So how would you alleviate that problem?
The way that we would alleviate it is you first look at what cash you have to physically outlay just to keep your doors, just to provide the service that you're providing. Be it if you're doing HVAC, what it costs to equip your truck. If you are doing electrical wiring, there's a fixed cost that you have to pay out in cash to have somebody on the road. And you need to break that down. And then you also have to look at your overhead costs at what I call your hidden costs. You have to pay the insurance on the person. You have to do their payroll taxes. A lot of companies will issue out paychecks, but forget to pay the government the payroll taxes that are owed on that money. They don't properly allocate the cash to cover those expenses. They are too busy looking at what's only in the checkbook instead of also forecasting. So you have to have a happy medium.
Over the years, we've had guests on the show that have left resources behind, like hourly rate calculators and things like that, which break down, I think, what you're talking about, general overheads that may sometimes get overlooked when you're setting your price. Things like you said before, fuel for your vehicle insurance, tax responsibilities, superannuation, or I think you guys call it 401 or 401k or whatever it is. Basically, allowances for your staff, electricity for the office, everything basically that, goes into the running of a business, understanding what they are and then breaking them down into bite-sized chunks. So when you set your hourly rate, you're covering that at least and making a profit on top of it.
Correct.
Okay, cool. And in your experience, is that something that you think contractors are still dropping the ball on today? Is there an area there where like a lot of them just not charging enough to cover their actual expenses?
I believe that there are a lot out there that don't know what their proper expenses are. They do not. I don't feel like that people watch what's going through their checkbook. All that they're doing is they go out, they wake up in the morning, they say, "Oh, I've got $300 in my checking account. I need to go out and get some more money. So I need to do 5 installs or 5 service contracts." So they'll run out, do those services, issue invoices, and say, "Okay, great, I've made $400 today," but they don't take into account that they might have spent $300 in supplies and materials, gas running around, and so really they only netted $100.
Right.
We had one guy that bid on a job, and they bid the job almost $200,000 upside down because they wanted that immediate cash in, and they figured they would just deal with the shortfall at the end of the contract.
It's a hell of a shortfall.
Oh, it's a terrible shortfall. And you sit there and you say to yourself, all right, so because you mismanaged your expenses and you got yourself into a cash crunch, you started accepting jobs that you knew were not profitable, but it was just bringing in cash so you could pay one person and then delay paying the next person. And that's not a good business model. You will never get out of it.
We interrupt this podcast today to talk to you very quickly about Tradie Web Guys content creation program. That program has been designed specifically for trade-based organizations as a way that you guys as trade business owners can start creating content that enables you to engage better with your customers and your potential customers. It will enable you to build trust and build rapport because what you're doing is you're investing in educating them. Biggest problem that we see with our customers today is that they're not regularly updating their websites. And that's a problem because first of all, the search engines are looking for that. And second of all, potential customers are also looking for it. Tradie Web Guys content creation program has been specifically designed to help you get regular, relevant content on your website consistently every month. We know that it's hard when you're out there on the tools, and we know that sometimes you don't always have the time to be able to do these things yourself. So we're taking it off your hands for you. It's a service that we're offering for you guys. We want to make sure that you're getting this done because we know how important it is. Anyway, head across to tradiewebguys.com.au/content, fill in the form, and one of our representatives will come back to you. I know even here in Australia, back when I was a plumber, I was working for a company that was a construction company. So we were doing like residential developments, like apartment blocks, so on and so forth for builders. And even back then, we were basically pricing jobs at cost. So without profit on top of it, they were pricing the jobs, and we were hoping to make money off variations and additional costs, within the build. It was just ridiculous. It was absolutely insane, and it's one of the reasons why I got out of the game, to be honest with you, because I just saw this happening and I was like, why would you bother this? It just doesn't make sense.
Well, there's a theory that used to be done. It was called your loss leader. Supermarkets and retail stores would normally put a product that was a necessity item in the center of the store that they knew people would have to come in and buy.
Yeah.
But it was intended to get you into the store so you would buy it knowing that there was a large chance that you would acquire additional products on your way out. I owned a gas station at one time up in the mountains, and I got into a disagreement with my partner. We were 18 cents higher than the gas station down the street. We were competing against Shell. And his comment was, we need to lower our gas prices so people will come into our store and buy product when they come in to fill up their gas tank. My argument was, at 18 cents higher, we are only making a 3-cent profit. If we drop our prices to match Shell, who is a national brand, we're never going to make $1 off of the gas. We will lose money with every sale, and then we are hoping that they walk in the store. That just doesn't follow a good business model.
Right.
But unfortunately, we see a lot of people that take that theory that they want to get people in the door, so they'll offer the discounts without realizing what the cash consequence of that discount is.
And I think I know over the years I've seen these discounting danger matrices where it highlights, if you're going to offer a 10% discount, and I'm paraphrasing this from my terrible memory, but I'm pretty sure that if you're going to discount a product at 10%, you need to sell 35% more of that product to bring you back to even.
Correct.
Yeah. So
and it's at that point in time, it's a numbers game, and that's where what we tell people is, let's look at the cash that's actually going to be spent to service what you're trying to do.
Right.
Right? Because at the end of the day, it doesn't matter what you sell the product for. If you don't have enough cash to pay your bills, then you should not have even gotten out of bed that morning.
So would it be? I mean, we could speak about this all day for sure. But as a general framework for listeners out there, would you say just sit down with a pen and paper over a beer or a coffee or whatever and jot down all of the expenses that happen in your business, so you have an understanding of actually what those expenses are, and from there you can break down what those costs are, how frequently you have to pay them, and you can build that into your costs. So we've got resources on the siteshed.com. You can go get those guys if you want to. There's spreadsheets there where you can, pricing calculators and all that kind of stuff. However, at a basic level, you can sit down in the back of a beer napkin in a pub and you can jot these things down. But you need to cover things that Tab's just spoken about: fuel prices, your insurances. You've got to cover electricity bills. You've got to cover vehicle payments. You've got to cover your staff obligations, which could be superannuation or 401k. You've got to cover any allowances that might be relevant to that staff member, which might be, site allowances or danger payments or whatever it could be, holiday pay, sick pay. Break all that stuff down, and then once you've got an understanding of what that looks like, you'll probably be pretty surprised at what you need to be charging as an hourly rate to even break even.
Well, and you're exactly correct. And that doesn't even include covering what they need to take out for them to support themselves.
Right.
So what I did with my business is we sat down, we went through a major restructuring about 4 years ago. And I said, all right, this is how much my personal lifestyle is. So I broke out my lifestyle because I got into business to make money, not to feed everybody else.
Right.
And so I added that back into the cash number to make sure that when we priced a service, my lifestyle was taken care of. And too many times we see people that they will take into account the fuel, they'll take into account their employees, but they never take into account their own profit as for them to live on. And so then you basically have to draw a line in the sand that says, I want a 30% profit, or I want a 25% profit, knowing that the government is going to take a good 30% out of your profit for them.
Yeah. And it's an amazing revelation, I think, when you look at that figure and you go, good grief, I need to be charging $250 an hour in order to break even without even, profit. And I'm currently charging $150 an hour. No wonder I'm always broke.
Yeah, and it's a revelation that anybody, especially, but what we see it a lot in is the tradies they know how to do their trade, which is fantastic. And even if they have a pint of beer and they're sitting down on the back of the napkin, if they just open up their bank statement for 1 month and go through what their bank statement says, I normally try to get my clients to do 3 months. The other thing that I try to get my clients to do is through their set of books, and we use Xero for a lot of what we advise our clients to do. I have them incorporate. Now, this is for small trades, not large corporations, but your small trades, to put their personal checking account into their Xero and create a category called personal. That way, we can properly capture the amount of cash that's truly going to fund their company. because after 3 months, they are amazed at how much money they're taking back out of their pocket to put back into their business that they weren't thinking about.
Yeah, that's an interesting way to do it. I've never gone down. I mean, we use Xero ourselves, and it's brilliant. I don't have any personal accounts tied into that.
It's not one of those things that you really need to do on a consistent basis, but with the way that Xero can automatically download and incorporate your bank statements in, it gives you a very easy method of downloading your expenses and seeing with that second categorization of your company account and then a personal account and say, wow, when I went out and met John for lunch, I then went over to the hardware store and bought these things, but I paid cash for it. I did it with my personal credit card. I didn't run it through the business, didn't think about it. But all of a sudden, when you capture all of your financial tools, be it your credit cards, your personal bank statement, and your business bank statement, all in one data center, you can see exactly where all of your cash is going. And you can get a much better and clearer picture as to how much it actually takes to operate.
Yeah, I like that. Actually, and coming to think of it, I think as well, Xero actually does have a personal section to it where you can set up your personal funds and track them. I'm pretty sure. And I think it's for budgeting and things like that. I'll have to go check that out.
But so that's where when you start looking at cash, a lot of people will finance or hide their cash shortfalls on their personal credit cards.
Yeah, okay. Yeah.
And that's a dangerous area. They'll start racking up debts on their personal credit cards because they don't have any cash in their checking account, but they've got to pay for the wiring or for the conduit. So they put it on their personal card, and then at the end of the month, they still don't have enough to pay it, so they'll just do the minimum. And they really haven't looked at the fact that their business itself is not making the cash to support their needs.
So one of the cool things that I did, and for the listeners out there, I'm not an accountant, but you can take this as some advice of what's worked for me over the years with business accounts, is I went to the bank and I got a business checking card, and any expense that goes through the business, I use that card only. And so I don't ever use my personal card for anything to do with business. Everything goes through the business cards, which means that when I go to reconcile my Xero, or when my accountant jumps in there to check out my to do my BAS or my tax or whatever it is, she knows that anything that's in there is being a business expense. And anything that I pay for personally, I pay from a personal card. Anything that I pay for with my business, I pay for my business card, and it's just a far clear-cut way of managing it. Is that what you advise your clients to do as well, Tab?
Oh, certainly. What we advise them to do is we advise them to have their personal checking account and then their business checking account.
Yep.
And then we also advise them to have a tax account, an account set aside just for their taxes.
Yep.
Then we advise them to have a personal credit card and a business credit card. Mm-hmm. And so there are 5 accounts basically that every business owner should have, because at the end of the day, when I turn in I use Citibank for my credit card. When I turn that in, I know that everything that's on there is business. But when I use my Barclay, everything on there is personal, and I don't have to worry about it.
Right. Yeah. Okay. Cool. So jumping into reporting now, just quickly, I want to clarify on what you think are the important things to be reporting on, at what frequency and why. So, for example, I know I'm in the habit of every week I do my bank reconciliation, because I know that if I leave it to get to a month, it takes me 2.5 hours. Whereas if I do it weekly, I can get it done in half an hour, more or less. And I can also then see at the same time I do my reporting. So I check profit and loss, and I compare that with the month previous. And then every quarter I'll check it with the previous quarter, et cetera, et cetera. So what do you advise your clients, or even for the listeners out there, to do in terms of, these are the reports you need to be looking at, and this is how often you need to be looking at them?
I advise at least on a weekly basis, you need to see what's in your checking account, what has come in, and make sure your books are reconciled. one of the things that I will caution is that if you use a debit card and not a credit card, you almost need to be reconciling your books daily. And I'll give you an example. We had a vendor that we decided to cut off. He had access to our debit card, and he debited, quote unquote, mistakenly $3,300 out of our checking account through the debit card. Mm-hmm. Well, if I had not been reconciling that on a daily basis, checking those expenditures, I would have gone a week or two and not realized that that amount of cash had disappeared without me having budgeted for it. Mm-hmm. And that's a downfall with debit cards that are tied to corporate checking accounts. So you need to look.
But how would that be different if it was a credit card?
If it's a credit card, the charge on the credit card comes on there, then you have the right to dispute it. The cash is still in your checking account.
Right.
But with a debit card, that cash is gone. And sometimes there's no way of getting it back.
That's interesting. Okay. I didn't realize. I mean, because I've sort of have done everything I can to not have credit cards. And therefore I don't. Everything's debit cards. And I've got checking accounts that are set up effectively as a credit account, but they're not. They're checking accounts. But I never thought of that.
So what I've done is I've partnered with Citibank, and so we have one company credit card that 10 different employees use, but it's a credit card. So technically speaking, we can dispute any charge, but at the end of the day, our in-house bookkeeper will go through, see what all charges are pending on the card, and go ahead and remit payment that day, just as if it was a debit card tied to our checking account. Mm. But it also gives us the protection that if we have a fraudulent charge, or if the credit card number were to be taken, we have a stopgap in place to where our checking account and the cash that's in there is not being hijacked. This past Christmas, I took my wife and children down to Disney World in Orlando, Florida. And I get a phone call while we're down there from Citibank wanting to know if we were on vacation. I said, well, yes, we are. They said, great. Where are you on vacation? I said, well, you tell me why you're asking. Well, we're noticing a charge right now going through a Hong Kong restaurant and did not know if you were in Hong Kong or not.
Wow.
Nope. I am in the United States of America. So Epcot Disney did not have a Hong Kong location. But if that charge had been on our debit card, then that money could have been lost forever.
Really? Looks like I might have a phone call to make by the sound of it.
Well, and it's something that a lot of banks don't talk about because they want the debit cards going through that bank, because if you get an overdraft on your account, then they get to make $35 off each overdraft.
Right.
And the banks are in the business to make money.
That's a good point. Scumbags. Anyway,
don't get me started on banks, because I'll upset my uncle who is a banker, but we'll just leave it alone. But banks, there was a local bank here in Tennessee that had a net profit for the year of right at about $485,000. $650,000 of their revenue was in bad debt and non-sufficient funds overdraft charges.
Right.
So they made money off of people having cash flow problems.
I know. I've always found the irony of banks kind of overwhelming, where if you've got money in your account, they'll give you interest and they'll pay you for it. Whereas if you don't have money in your account, then they'll take more money out. It's almost like a negative interest rate. You are going to pay them for holding the money because you can't keep it anyplace else. Yes. That's ridiculous. Anyway, let's not get wound up in that. So in terms of, obviously, okay, check your banks and reconcile with, and sorry, we should probably clarify as well, for the listeners out there that aren't familiar with the term reconciling, it's basically mapping your expenses to a certain account. So if you've spent $3,000 in 1 week on buying timber for a home installation, then you need to reconcile that to your materials chart of accounts within your accounting software which means that, your accountant can, when they do the tax, they can see that you spent $3,000 on a business expense. Is that a pretty good summary, Tab?
That's a very good summary. And the reconciliation also makes sure that your books tie to your checking account or to your credit card.
Right.
So you've coded it properly, and you have verified that what went through your bank is what you recorded in your books.
Right. And in terms of the reports that we should be looking at, obviously profit and loss.
So the reports that I normally have my clients pull for me is we ask them to pull their profit and loss.
Mm-hmm.
We ask them to pull their balance sheet with a comparative period, either be it month-to-month comparison, year-to-year comparison. But your balance sheet items can get lost, or items can get hidden from your income statement and go onto your balance sheet, which affect your cash flow, but don't necessarily show up on your profit and loss statement. So by doing that comparison report, you can see what items you're either spending cash on or that you are making cash on, be it finance charges or receivables. Or if you sit there scratching your head and saying, geez, I've only got $500 in the checking account, where's all my money? And you notice you've got $90,000 of receivables, that's where your money is. It's in other people's checking accounts.
That's interesting. And I think one of the things that I had to, that jumped out at me as well, was when I was looking at my profit and loss, I needed to make sure that I was including in the profit and loss statement my wages, because sometimes you don't always look at that, like with the profit and loss. I guess the balance sheet clears that up, right?
The balance sheet can clear that out. It depends upon how you're set up. So if you are looking at as the owner of the company, I tell people to create an account called an owner's draw and to put that on the equity section of your balance sheet. So that way, as you pull money out personally from your company, it's not necessarily an expense, but your balance sheet will show you how much money you are really living off of your company.
Right. Okay. Yep. Gotcha. Lovely. Okay, cool. So profit and loss statement, balance sheet. Anything else?
Most companies can also look at your balance sheet will show you what your payables are and what your receivables are. But if you also pull your aging of your receivables and your accounts payable forecast, and what that means is that if you are keeping your books on the accrual method, you might get a light bill in from your local utility company. You put it in, but it's not due for 30 days. But eventually you're going to need to pay cash out to cover that bill. And that's what your payables forecasting will show you. Whereas with your receivables aging, it will show you how many days behind people are on paying you. And that's where you need to focus on your collections to get cash back in the door. If somebody's been out for 90 days, don't do another service call for them until they pony up and pay you something.
Right. Okay. Gotcha. Beautiful. Love it. All right. Well, look, I think we'll wrap this episode up and we'll come back with the final episode, and that's going to be laying the right foundations for your business. Is there anything else you wanted to cover off on there, Tab?
No, that sounds great.
All right, great. Well, listeners, you have just heard the second episode of the Tax Essentials for Tradies and Contractors series that I'm conducting with Tab Burkhalter from thenumbershouse.com. Guys, if you want to get hold of the contractor tax blueprint, you can head across to the resources section on the siteshed.com, or you can also go to this episode's webpage, which you can get to through, again, the siteshed.com. You'll be able to get hold of that document there, which will give you a bit of a framework as to what you need to be considering when it comes to tax. We're going to be coming back in the next episode. We're going to be talking about laying the right foundations for your business. And if you missed the previous episode, guys, it was why you need to keep 2 sets of books within your company. Tab, thank you for joining us. We're going to come back with this third and final episode, and we look forward to hearing your comments and questions, guys. If you have any, you by all means can jump into the Facebook group and ask those. Otherwise, if there's anything more specific that you wanted to ask, I'm sure Tab will come back on the show to answer those.
Thank you very much, Matt.
Right on. Thank you for listening to another episode of Toolbox Talks. If you're liking what you hear, then you can head across to thesiteshed.com where you can join our community by signing up to our Toolbox Talks. You'll get sent a weekly notification, which is basically a highlight of everything that we've spoken about during that week, along with any other industry news that may be relevant or specific to the trades. If you're enjoying the show, you can head across to iTunes, Stitcher, or SoundCloud, where you can leave us a review. That would be fantastic, and all the reviews get read out in the show. Likewise, if you have any friends or colleagues that you think would benefit from the show and the episodes that we create, then please go ahead and share it with them.